right? So most of you students who are obtain that vLearning, right, about me, right? If those who are not obtain the vLearning that purchase the vLearning, I will introduce myself, right? I'm Nuwan, lecturer from Rajasthan University under the Department of Accountancy and Finance, and I'm graduated from University of Sri Lanka under the Department of Accounting with the first class. So that's my then I'm following my MSc, that Master of Science in University of Sri Lanka, and I'm a fast finalist of CA and professional strategic level of ACC and the finalist of CMA. So that's all about the myself, that, right? Then I can discuss today discussions, right? So before going to the paper discussion, so I will let you know what is the structure of the paper. Structure of the paper. Then when we discuss about the paper, my dear students, please keep in mind there are there are 3 sections, right? And I will share that there are 3 sections. There are 3 sections. What are those 3 sections in your paper? There are 3 sections. Section A. Under that section A, the marks allocation for section A is that 20 marks each question, 5 marks, then 4 questions. Question 1, that is residence status. Then question 2. So this the structure, my dear student. The structure will not change, right, in this time. So your year of assessment is 2023 and 4, right? And residence status is the first question. That residence status, when we discuss the residence status, whether that a person is a resident or not. So regarding that, my dear students, what you need to understand is if the resident question can ask in individual and company. So last time I can remember, if I was not mistaken, the institute test the residence status of an company. Therefore, in this time, definitely they will test individual residence status. The individual residence status, right? Individual residence status. Please keep in mind and focus on that, right? So then I will do one question regarding from that area, right? Don't worry, in today itself. Then even though the model paper share with you, that within 2 hours, it will not possible to cover everything, but I will try to cover much as possible. That SWAT things as one of the student, I will try to cover. And share transaction levy question as one of the students, I will cover. If I am not able to cover, please get my contact number from that WhatsApp group, and you can contact me, right? And you can ask any questions, right? Okay. So that SWAT question asked one of our vLearning students. So you can call me and take opportunity to ask that question. But yes, definitely I will do the company tax and the individual tax both, right? So here the second question, normally the second question will ask from, and third question fourth, then third question or fourth question, that case law. Case law. The fourth question most probably will be capital gain. Capital gain. So here the question number 2 can be, that in this time, that it can be stamp duty, not fully, it's a mix of share transaction levy, that tourism development levy, right? Any of these area can test in this time. Keep in mind the SSCL, social security contribution levy, also possible to check. Possible to check. So here then section B, all questions are compulsory. There is no selections. There is no optional questions. All are compulsory. Then for section B, there are 30 marks, 3 questions. Under that, there are compulsory. The compulsory mean the absolute. That means the fixed questions are there. Section 5, section 6, and section 7. You know that tax administration. Tax administration. Then the question 6 is, my dear student, you know that SWAT or VAT, right? These are the question number 5, 6, 7 can any of these question, right? So here the partnership tax, these are fixed. You know that. Then section B, section C, there are 50 marks. You know that there are 2 questions. So I recommend in your exam to start from the last 2 questions, right? So that is, you know, that 50% out of your syllabus as well as your question paper. Therefore, it is better to start with the last 2 questions. You know that question number 8, question number 9. The 8 is company tax. Question number 9 is individual tax. Individual tax. Then I will go to the our discussion right directly. So question paper, you already may receive this. Did you all receive this question paper? Hope you receive this name. Then otherwise you can request from one of our the management team. They will committed and dedicated to give this information, share with this information with you guys. So I will start with the question number 9. The colony is a chartered accountant attached to a leading construction company in Sri Lanka as chief accountant. Right here, please change the accountant. Right, accountant. He has given the following information for the year of assessment 2023 and 4. That is the year of assessment which relevant to your exam. The income from employment given. Income from employment given. So before that, I will draw the paper structure, the question structure, answer format. So please draw with me. Then you all can complete the question with me. Right. So here the name is Kalana. So we'll start with like this. Mr. Kalana. Calculation of tax liability. For the year of assessment. $23 and 4. Then rupees in 1000. What do you want, right? You can continue as rupees. Then I use rupees in 1000 because that is easy to me. Then my dear students, there is no standard format for discuss these questions, but this is the practicable format, right? So therefore, don't think this is the only way to calculate this liability, right? This is the way that is specified in the, you know that Inland Revenue website, they publish the return. This is the structure of the return, right? So here, then before drawing this structure, you should read. You should read uh, whole question. Then you can identify what are the that available income sources. You can understand the available income sources, or you can identify the available income sources, right? So under this, you know that how many income sources are there. The employment income is there. Then you know that there is a business income, isn't it? The partnership something, right? And there is a separate uh, business. Separate business is there. Then you know that investment income is there. So all the income applicable to the individual is there. Therefore, employment income, business income, investment income. You know that once we take all together, a total assessable income. Then you can deduct the section 52. Qualifying payment and relief. So once you deduct the qualifying payment and relief, you know that you can calculate taxable income. Then you can get gross tax liability. Then tax credit. Once you deduct the tax credit from gross tax liability, so you can calculate the balance tax payable. So you separately need to calculate the employment income as a separate note working, note 1, the business income, note 2, investment, note 3. Investment, note 3. I can't understand. Still, right? I'm thinking why that student is behave like that, right? What is the reason? Just I won't, right? This is the very first time in my history, right? I faced this kind of incident, right? I did a many seminar with JMC as well as many teachers, and you know that many forum in the universities and all. Still, I don't have such kind of experience. I don't know what is the reason that student behave like that, right? So if there is any personal issue with one of our management or with us, they have to directly discuss with me. Then business income. Under that business income, my dear students, you know that when we discuss this question, there were two types of business income. One is they conduct their own business. Same time, the person, the colonel is the partner. Therefore, there is a profit or gain from the partnership as well. That also should part of that investment income. And if there is any tax credit applicable to that partner, you know that that partners already paid tax by the partnership, you know, that part of that you can take a tax credit. You can take tax credit. Right. So then the next note is, you know, that note 2, sorry, note 3, investment income. So to draw this properly, what my advice is, first with by taking 5 or 10 minutes, or don't take much time, you know that 10 minutes is too much. So by taking a 2-3 minute, please read the question very carefully. Please read the question very carefully, right? Then you can understand how you can present these answers in your Excel. Therefore, the reading, then what I believe is, when you correctly, properly read the question very carefully, it seems like you already, that means you complete the more than 50% of the question. So in this case, according to this one, then I will go through that. So then, because then I already know this question, therefore then I'm not going to read that again, because then you have time to read, right? Therefore, by to save your time, like I will directly involved with the calculation. So the gross salary per month is 300,000. Then I will take that as 1,000. The gross salary, always you need to get the gross salary. Then how many months? So because they have not given when they start, when he start the employment, therefore simply we had assumed he started the employment to already existing employee when we start the year of assessment 2023 and 4, that means 1st April 2023. Therefore 300 into 12, you know that total 3,600 rupees in 1,000, right? So next we can see that the arrears salary for the year 2023 and 2, right? Arrears salary, you know that that salary is arrears from 2023 and 4, 2 and 3. That is the previous year of assessment. That is a previous year of assessment. But you received that arrears salary during the period. If you received any arrears salary during the year of assessment, you know that employment income we need to calculate based on the cash basis. Therefore, whatever the period relevant that salary, if you received during the year, you have to take that as an income. Therefore, this 300 you can take as an income. So that is what arrears salary. So next one, the company has provided him a car with fuel. You know, that is a non-cash benefit, the vehicle benefit or transport facility provided by employer. Car with fuel, no need to worry about the engine capacity. Without considering the engine capacity, whatever the car right received, whatever the car received, benefit received, that is non-cash. So any car, right, irrespective of you know that the engine capacity for car per month 20,000, and you know that if the car provide with driver, another 10,000, and if the car provide with fuel, another 20. So in this case, no driver, only car and fuel, the petrol or diesel, whatever, right? So here, therefore, the 20,000 for vehicle, another 20,000 per month for fuel, then that is 20 to 40,000 per month into 12. How many months? That is 12 months. But be very careful when you calculate this kind of question, the examiner can be very creative. An examiner can give that question like this, right? So here the company has provided him a car with fuel from 1st June 2023. The 1st June 2023, in the sense you are not able, you're not eligible to calculate that vehicle benefit for 12 months because you received that benefit from 1st June 2023. That means for 10 months. That means for 10 months, right? So next one, his son's school fee paid by the company 180,000 for the year. That means, my dear students, that is a benefit to that employee. Why that employee's sons received that admission or the reimbursement of the school fee? Because of Mr. Kalana is work in a particular organization. Otherwise, Mr. Kalana's sons are not received that particular benefit. Therefore, there is a benefit because of the employment. If there is any benefit because of the employment, my dear students, we have to take that as a part of employment income. Right? So here, you know that son's school fee, you know that no need to multiply that because then there is a one time 180,000. 180,000. Then next one, the medical benefit received from common scheme. The common scheme mean, my dear students, the reimbursement of the medical expenses. There is a common platform of the policy for all the full-time workers. You know that if there is any health, medical or dental reimbursement, you know that that reimbursement applicable for all full-time workers in equal manner. All full-time workers in equal manner. You know that, my dear students, that should be excluded from the calculation of the employment income. That should be excluded. That should be excluded. Therefore, the medical benefit or the medical reimbursement, you should write down that as an exclude. Exclude. Why? Because that is available for all full-time workers. Therefore, we have to write down benefits available for all full-time workers. That is the reason. All full-time workers. Then Kalana, Mr. Kalana paid the APIT during the year 36,000. The only application regarding the APIT paid. So here, the given APIT amount you can deduct as an the tax credit under the income, the tax liability calculation. There, otherwise, don't worry about anything regarding that APIT. One question can test in exam other than this one. So examiner can ask what are the responsibilities of the employer regarding the APIT. Therefore, you have to be ready for that. When we discuss the vLearning video, we have already discussed that part, right? Because we did past papers. Under that, you can see that. So other students, you can you can go and see your the past papers section regarding that the responsibilities of the employer regarding APIT or payee, both are same, but the pay is abolished after 1st January 2020. But you know that after that, then they introduce in 2020 sorry, 2022 introduce a particular advanced tax method called the APIT. Then he received a share of profit. The firm from a partnership where he also was a partner during the year, 2.3 million. And on that 2.3 million, the partnership paid 108,000. So that 108,000 is applicable for this 2.3 million partnership taxable income. Therefore, this 2.3 million should be part of your business income, as well as already paid 108,000. You can take as a tax credit. You can take that as a tax credit. So further, he owns an electric shop also. When calculate this electric shop, you know that 2023 and 4, please make that amendment, right? So 2023 and 4 is as follows. So income is there 7.25 million. When calculating this net profit 1,551,000, they calculated these expenses purchase. You know that purchase in the sense when you need to sell the electric or you know that equipment or whatever the bulbs or whatever things you need to purchase. Therefore, the cost of that purchase item, you can deduct that as an salary. Sorry, that as an expense as per section 10. So here is staff salary. The staff salary is, you know, that the business, the expense which incurred for the business income generation. Therefore, that is deductible salary. So rent also possible because then you need to continue particular the place, right? Particular place, right? Therefore, you need to incur that rent. Therefore, you can deduct that as on section 10, sorry, section 11. So electricity also you can allow. The water, telephone, other expenses you can allow as per a particular, you know, that section 11. The section 11 mean if you incur particular expense to generate the business income, you can deduct. You can deduct that as an expense. But you know, as per section 16, the accounting depreciation is not allowed to deduct. Therefore, then we have to go to the business income. Here the profit before tax. So let's say then we'll do this as an rupees in 1,000. So the profit before tax is how much? 1,551,000. Then from that, then you know that different expenses already deducted, but up to this point, the other expense, all the expenses are allowable to deduct as per section 11. But depreciation 200 are disallowed. Therefore, accounting depreciation you can add back. Because of, you know, the account depreciation you cannot deduct. But instead of that, you can get what? The capital allowance. You know that additional information given regarding the capital allowances. What is that? A company purchased in 2020 and 21 a cost of 800 was there in a business. Right? There is no other asset. Right? The computer purchase, the company, not company, that is I read that as a company, but there is a computer purchase. The computer purchased during the 2020 and 21 year of assessment for 800,000, that is the cost. No other asset to claim the capital allowance, that is the only applicable asset. So you know that this asset after purchase 1st April 2018, therefore what is the rate? The 5-year or 20%. So 5-year mean the sense, you know, there is a rule. The year which purchase that particular depreciable asset, you can calculate the capital allowances without considering the date of the date of purchase. You can calculate the capital allowance for whole year, right? So there is another one. What is that? If you dispose particular asset during the year, you cannot calculate the capital allowance for that disposed year. That is the rule. The disposed year, you are not supposed to get that capital allowances. Therefore, you can get 20 and 21 fully, 21 and 2, 2 and 3, but 3 and 4 you cannot take. Because 3 and 4 you are going to dispose it, therefore 3 year. 3 year. So how you can get 3 year? 800 into, you can divide by 5 multiplied by 20 into 3 year, right? 3 year, right? So sorry here, no need 3 year, just you know that 20%, because 3 year there is accumulated capital allowance, right? So that's all, right? Because here what we discussed, that is a third, fourth year. So only another 1 year you can take the capital allowances, because this is the third year, only another 1 year, another 1 year you can take this, right? So already for 3 year taken, this is the fourth year, another 1 year you can take. How much the total? You know that 800 into 20%, that is 160, right? You need to deduct that. You can deduct that. Any other? The donation is there, 50,000. The donation, any donation you cannot deduct from the business income. 50,000 you can add back, but this donation you can deduct from the qualifying payment if you want, but here you cannot deduct. Why? Because they have nothing given whether this is an approved, whether this donation made to approved fund or any government institute or whatever things. Therefore, we cannot deduct this 50,000 as an qualifying payment, because they have not given the proper information. Therefore, we have to assume that that is a disallowable, you know that, according to particular criteria. So that's all about, you know, that business income. So we can complete that business income part here. Here 160. So what is the total of, you know, that plus column? 1801, 160. You know, 1641. So from that you need to add what? Partnership, profit share. So how much the partnership profit share? As I remember, if I was not mistaken, it was 2.3 million. Yes. Then 108,000 is the tax credit. Therefore, here 108 you can take that as an partnership tax credit. Right. So then you can get the total assessable income from business. $3,941. 3,941. Now we can complete the employment income as a altogether 4,560. Assessable income from employment 4,560. Therefore 4,560. Then we have to go to the investment income. Here we can see that information. Kalanar entered his part of president to the business. Monthly rent is 60,000. You know that if there is any rent income, the monthly rent excess of 100,000, you know that you need to pay the withholding tax at 10%. But here no need to pay withholding tax. Why? What is the reason? The monthly rent is less than 100,000. Therefore, we can calculate that rent income. So when you calculate that rent income, always you need to get what? The gross rent is, you know, that 16 to 12, 16 into 12 mean 720. From that, you can deduct the rates paid. If the rates paid by the owner, you can deduct that as an expense. In this case, there is no, yes, the rates paid is 60. So that nothing given who is paid that, don't worry. That's at that time simply need to assume that paid as an owner. Therefore, in addition to that, they have given the repair expense for the period is, you know, that 0. So here for individual, you know that you can deduct the higher value of actual repair cost of 25% of the gross rental as an expense. But if your actual repair expense is the highest value, you have to deduct from the rent income under the investment. But if the 25% of the gross rental is the highest value, you need to deduct from qualifying payment. Therefore, in this case, you can see the actual repair expense is 0. Therefore, the 25% gross rental, the 25% gross rental allowance is higher. Therefore, how much? Then how much the gross rental? The gross rental given is 720. And here the 720 into 25%. That is 180. 180. So further, he has a fixed deposit in a bank on that gross interest received for the year 360. The relevant withholding tax also deducted. Here, you know that you have to take the gross rental. So how much the gross rental here? 360. On that is 360. You know that you already deducted. That means you already paid that tax credit. So withholding tax on interest. So how much the withholding tax on interest? So you know that 316 to 5%. You must keep in mind the withholding tax rate. You must keep in mind the withholding tax rate. You know that withholding tax rate for interest is 5%. The withholding tax rate for rent is 10%. Withholding tax rate for, you know that dividend is 15%. That also the 15% is, you know, that final tax. That is a final tax. So therefore, in this case, 300 into that is a gross one. You need to pay 5%. That is a gross value you given. You already paid 5% on that 360. 360 into 5%. You know that there is 18. Once you receive this income, interest income, the bank already deduct this 18 and pay to the inland revenue department on behalf of you. Therefore, this is an, you know, that credit you can deduct. So in addition to that, the here the colonel made a following expense: donation to COVID-19 fund established by the government of government 100,000. That is a cash. You know that the government is, you know that the COVID-19 fund is, you know that a government fund. So therefore, COVID-19 fund, the donation to the COVID-19 fund, you can deduct that as an qualifying payment. So without any restrictions, you can deduct that either cash or either, you know that cash or in the form of goods. You can deduct without any restrictions whatever the amount you donate for the government or government established fund, or you know that Sevana fund, you know that National Kidney Fund, right? And COVID-19 fund, any government school, any university, any government institute, right? Any the funds established by the government or municipal council law, you know that urban council law, that's regional decree, divisional secretary, whatever the way, right? So donation to approved charity to care the needy people is 100,000. That donation to approved charity, you know that donation to approved charity in a cash, there is a restrictions. You can deduct the lower value of only cash allow. If there is any donation made to the approved charity in the form of the goods, you know that that is not allowed. But if there is a donation to the approved charity in the cash, the lower value you can deduct. What is the lower value? Actual cash amount of 75,000 maximum, or 1/3 of taxable income. Now you know in between the actual cash donation 100,000 and the maximum 75,000, you can only deduct the 75,000, but still we can't calculate the taxable income. Once we calculate the taxable income, we can take 1/3 of that, and you can compare with the 75,000 in this case. So whatever the amount is lower, you can deduct that as an approved charity donation. So that's all about the information given in the question. Therefore, we can take summary of that investment income. Here total 1,020. So that is accessible. Investment income 1,020. So here you can add that as 1,002. So we can take all together. So 9,521. No, Buddha, no. So the one student asked unfast. So the one student asked, so for individual lower value of charity is 100,000. Is it? No, Buddha, 75,000. For individual, 75,000, right? For company, 500,000. 500,000. Did you get that? The lower value is 75,000, right? Please keep in mind that is absolute value. That is a maximum allow only 75,000. That is absolute. For individual, for company, that is 500,000. The company, you know that partnership, any entity, 500,000. So in this case, even though in the case of the individual, the examiner given or not, you can deduct 1.2 million as an absolute value. That is a personal tax relief. When you calculate that individual taxation, please keep in mind this will not give in your exam paper as an adjustment. Then you need to do that adjustment by yourself. The personal relief is 1.2. What are the other qualifying payment available for individuals? You know that if there is any foreign service provide, and if you earn the income from the foreign currency, you can take that as an qualifying payment. But in this case, there is no such foreign currency service income. So other one is, you know that the 25% gross rental allowances we already taken that, right? So therefore this is the total available qualifying payment and relief for individual in this calendar. Therefore now you can calculate the alternative taxable income. Yes, but I will do, right? I will do, Lukman, right? Don't worry. Then because then I am going to calculate the tentative taxable income uh, without taking that approved charity donation. So how much the tentative um, taxable income, that is 8 million something, 8,041,000 divided by 3. You know that you will receive 2,680,333 something. So what is the lower one? 2 million something, no? The actual cash donation 100,000, no, 75,000. So lower value is, you know that 75,000. Therefore here only allow 75,000. Therefore now you can get the total qualifying and payment, right, including that donation to charity, right? So 12 million 355. No, not 12 million, right? 1 million. 1 million. Then you can calculate the taxable income 9,521 minus this value. So is that 7,966,000? No. 9,521 minus 1,356. Not 300. Ne? Yes. Vyaputa, what is the wrong? Is this total taxable income? This one? Or any error in this one? 1,555. Okay. Thank you very much. So 1,200 plus 100 plus 75 plus. Yes, exactly. Thank you very much, Puta. Then 9,521 minus that answer. Yes, the answer, the earlier answer, this answer is correct. 9,669, 7,966. Thank you very much. So then now hope answer is correct, ne? Right. So now we have to calculate the gross tax liability. Then I will do and work that that working. So here how we can calculate. That tax liability you can calculate on the taxable income. Now here we have to evaluate, is there any the capital, is there any capital gain? Is there any capital gain on this taxable income? Now if there was, you have to calculate at 10%. If there is any terminal benefit, no need to worry about these things, just to explain these things, right? No need to write down these things when you're doing the calculation, just for your understanding. So now, if there is any gain from liquor, tobacco, betting and gambling, no such. Therefore, how much the balance taxable income? So the total taxable income represent the balance taxable income in this case. If then balance taxable income, how we can tax? If there is any balance taxable income, we have to tax like this first. That 500 here, 500 means 5,000 at 6%. Likewise, you can calculate 500 bucket 6 by 6 up to that 2.5 million, 2.5 million, right? So next, because you have more than 2.5 million, therefore next 500, so you can tax at 30%. Altogether already you tax 500, 500, 500, 500, 500. Altogether that 2.5 million, 2.5 million. What is the balance? The balance you can take how? Total 7,966, already 2.5 million considered for taxation. Therefore, what is the balance? 5,466. Right? It should be taxed at 36%. 36%. That is the maximum rate. So that 1,967.76 is the value. So here now you have to get the total here 30, 60. These are rupees in 1,090, 120, 150. Altogether, that how much? 2 million for 2,417.76 is the total. So here, that is the gross tax liability you can put here 2,417.76. That is the total tax credit, tax liability you should pay for this year of assessment. But that you already paid the APIT isn't there any installment payment? No, there is no self-assessment payment. If there was a self-assessment, you have to write down, right? But in this case, no self-assessment. So 36.36 plus 36 plus 108 plus 18 altogether 162. So total tax liability is 2,417,76 minus this tax credit. You know that 2 million, 2 million. You know that value is 2 million. How much? 255.76. Right. That is the answer. You know that one of your friend also given that answer, isn't it? Yes or no? Any doubt? Yes, correct. So one student asked, so can you explain more about the rates of the capital allowances when calculating individual tax? Uta, for individual tax or the company tax or partnership, there is no change in the rate of the capital allowances. Clear? Can you hear me? There is no change. Can you know whether you are vLearning student or outside participant? Then I can help you. Shami. Shami or Shami, right? Don't worry about the pronunciation of your name because I'm not familiar with this name, right? Sabuda, please send me a message, right? Then I can help you, right? The regarding who asked the question regarding the rates of the capital allowances, right? Right. So that is a very easy to keep in mind. Then I will let you know that at the end, right? So please remind me. So that is the calculation of the individual taxation, right? So with the limited time period, then I will directly move into the discussion of that. You know that the company tax, right? If you have any question regarding this individual tax calculation, you can ask now that student. Then again in next section I will discuss the that capital allowances discussion, right? The capital allowance, there is no change in the capital allowances rate, the respective of the individual or the company or partnership, whatever the person, the capital allowance rates are very same, right? Then I will draw the structure here. When I draw in structure, you know that the employment income is not applicable for a company. So what is the name of that company? The KGD Private Limited. You can write down the structure with me. Sorry, no employment income. Right. This is a structure. Right. Now we can start the calculation. So in this case, the following the information extracted from the financial statement for the end of 31st March 2024. Net profit before tax for the end of 31st March 2024 is how much? 81,341.4, right? Rupees in thousand. So when calculating this in the profit, it's include the below other income, rent income from property, investment property. If that income from the investment property, you know that it should be recorded as investment income, and the interest income on fixed deposit gross, that also should be an investment. Now we are going to discuss the business income. So can that include in this investment income? Can or can't? Can or can't? It cannot be. Therefore, 1.8 million you need to remove as an rent. The fixed deposit also how much? 1 million. I will do that adjustment at later. Don't worry, under the investment income. So here further the other income includes 665 profit on disposal of machinery. The machinery is, once you read this section, you can understand this machinery is used for the business purpose. Therefore, the business assets disposal gain you need to record under the business income. But this calculated profit is profit according to accounting, not taxation. Therefore, the accounting profit include that you need to remove. Remove, why you remove? Because that is an accounting profit. Instead of that, you need to calculate the profit according to the taxation. So work in one, how you can calculate as per section 16. Sales consideration minus tax written down value. How you can calculate the tax written down value? Cost minus accumulated capital allowance. Then how much the tax, the sales consideration, every information given under the adjustment number 7. Here you can see there is a information in this case. A machinery purchase in 2020 and 2021 for 2.75. That is the cost. Disposed during the year mean the 2023 and 44. This is the selling price for the purchase, sales consideration 2,360,000. 2,360 rupees in thousand. The cost is, you know that already calculated, 2.75, 2,750. Now the accumulated capital allowances you need to get. That student who asked that question, now you can understand, you have to memorize your knowledge. The machinery, what is the applicable capital allowance rate for machinery which first purchased after 1st April 2018? You know that is a 5-year or 20%. That is a 5-year or 20%. So you know that you need to identify the year of that asset purchase, 20 and 21, 1 and 2, 2 and 3, now 3 and 4. You know that if that asset disposed particular year, you cannot get the capital allowance for that particular year. But Any asset which purchase, you can calculate the capital allowance for that whole year. How many years? 3 years. 3 years. Then 2,750,000 into 20% into 3 years. So what is the total capital allowances, accumulated capital allowances? 1,650, exactly correct. Thank you, Gupta. Then you can get the tax written down value. Once you deduct this 1,100, then you can get the difference. There is a difference 1,260, that is plus value. Therefore, this again, the disposal gain according to the taxation we call it as, you know that assessable charge. Assessable charge is 1,260,000. So this assessable charge is the, you know, that gain, you can add 1,260 the gain as per the taxation, because we remove the gain as per the account. That is assessable charge. Work in one. So next information we can go. So this we already taken. Administration and the establishment expense include the following: the depreciation charge. The depreciation account in depreciation cannot include. Therefore, remove as per section 16. How much? 6,320,000. Instead of that, you know that you can calculate what? The capital allowances. To calculate the capital allowances, the information given under the 7th adjustment. Here, once you read that, you can understand. So the property, plant and equipment, here at 31st March 2020, it should be 4, right? 2024, not 3. 2024, typo error, right? So here, the investment property not eligible. Why? The investment property is not an depreciable asset. You know that capital allowance only you can claim on the depreciable asset. The depreciable asset in the meaning of any asset which used for the production of the business income, we can categorize as depreciable asset. But in this case, the investment properties, you know that land is used for rent income, that is investment. So building, the particular building which was purchased 2020 and 1, you know that any asset, that any building acquired after 1st April 2018, the capital allowances rate is, you know that 5%. The indirect they have defined, not the rate, but you know that indirect they have defined directly useful lifetime. Therefore, here the useful lifetime is 20 years. That means 5%. So how much? That is 410 rupees in 1,000. So the next one, the car used by the director, that is not eligible. Why? What is the reason? That is not an depreciable asset, my dear students. If any vehicle used for the transport traveling purpose, that is not generate business income. Therefore, we cannot calculate that as an, you know that depreciable asset. Therefore, you are not eligible to get the capital allowances. So transport lorry, that is a business purpose. The lorry vehicle after 1st April 2018, purchase after 1st April 2018. So you know that that is 20%. The 20% means 5 years. The what is the year of purchase? 21 and 2, and 2 and 3. Now we are in 3 and 4. This is the 3rd year. You can take another 2 years. You have to evaluate that, because some asset may include already capital allowances already fully claimed. If the capital allowances are fully claimed, you are not supposed to get the capital allowances for that particular year, in this case, so 20%, right? 6,700 into 20%, you know that 1,340. In next one, computers, you know that same rate, 20%, 250. Last one, computer software. We have to check whether they have given the economic useful lifetime. Yes, they have given 4 years. Then they can divide 4 multiplied by 25%. Otherwise, if the you know that useful lifetime for the computer software, like the intangible asset, not given, then at that time you have to assume that is an 20 years and 5%. But in this case, we cannot use that 20 or 5%, 20 years or 5%, because they have directly given the rate, the useful life. Either you can divide by 4 multiplied by 25%, right? You know that how to convert the number of useful lifetime into the rate. So I'm not going to worry about that, right? That is from A level. So how much this 1950 divided by 4, that is 487.5. So one student sent a message, right? So we'll see that what is that answer. So lorry, it should be 1600 motor lorry. I didn't put that, ne? Isn't it? එක දාලා නැහැ කියන එක නේද? What you mean that I missed that part, isn't it? Okay. Now that's all. Please take the total. Yes, thank you. Total should be the capital allowance. Total capital allowance should be 4,087.5. 4,087.5, isn't it? You can deduct 4,087.5. Clear? We complete this one. The donation to the COVID-19 fund, 1,420,000. You cannot deduct, because the any donation you cannot deduct under the business income. Therefore, add back. But this 1,420 you can take as an qualifying payment. Why you made the donation to COVID-19 fund? Therefore, there is no restriction, either cash or goods you can deduct. The foreign traveling expense directors, like foreign traveling expenses of directors under the business income. Under that, meet supplier. Meet supplier, that is allowed. That is allowed, because you know that not supplier, customers. Meet to customers, you know that is a business purpose. You know that foreign expenses, regarding that foreign expenses, if incurred to generate of the business income or relation to the business, you can allow. But you know that there is a personal traveling allowances by the directors, the private tour. The private tour, you know that is not allowed. Therefore, that cost you have to add back, already deducted when calculating this profit. Therefore, you have to add back. Then how much? 2,150,000. That is 2,150. The provision for the gratuity, you know that the gratuity provisions, any provisions you are not allowed to deduct. You know that under the section 10, you can see that under section 10 they have given, if there is any provision made for the future expenses which are already not, that means which are not yet incurred, you have to add back. But regarding this gratuity, you have to keep in mind if there is any, that if there is any actual gratuity paid, you can deduct that as an expense. Here, that repair expense on the rented property. The rented property is, that is not an business asset, that is an investment. Therefore, this 97,000 you can deduct from the investment income, that rent income, but you cannot deduct this under the business. Therefore, the repair cost, normally repair cost you can deduct, but here why you can't? Because that is incurred for the that rented asset, that is a rent income, but you can deduct this from rent income. So here we can do that. If you want on the rent income, how much the gross rent? The gross rent, can you remember we removed from the business income 1.8 million? Right? Is there any rates paid? No, nothing given about in this case. Therefore, then here you can deduct the repair because this is not an individual. Therefore, there is no no need to compare with the actual repair and the that 25% gross rental. The 25% gross rental allowance is only applicable for an individual. Therefore, here 97 you can deduct that as an expense. So the taxable rent income is something 1,800 minus 97. That 1,703. Right? Okay. Then selling and distribution include the bad debts. Bad debts. Right? Bad debts. On the trade data bad debts, that if there is any actual bad debts, right? The bad debts in the sense, that impairment of that impairment of trade receivable, that is the correct name, right? Right. So here the bad debts on trade data allow actual. That if something given, they have not taken reasonable action to recover that, you cannot. But that staff loan write-off is you cannot deduct. Therefore, 380 you have to add back. Staff loan, the bad debts only you can deduct for actual bad debts which incurred for the trade debtors. The foreign advertisement expense, normally if there is any advertisement expense, if it incurred for that business income generation without any restriction, either that capital nature or the revenue nature you can deduct. Therefore, that is allowed. Either allow or not, you have to write down. If it is disallowed, you can add back. If it is allowed, you have to write down. The entertainment expense for sales managers, that any entertainment to any party, that anytime that entertainment expense is not allowed. Therefore, entertainment expense is add back. So finance expense include the following. That under the section 12, then when it take the finance expense, you have to match with section 12 and 18 together. Section 12 explain that what are the nature of the finance expenses which you can deduct. The normally under the section 12, if any financial cost incurred for the production of business income in the respect of that the conduct in business, in the short term or long term, the maintain of the working capital management you can deduct. Normally the company bank overdraft, the overdraft will take for the day-to-day activity, that means working capital management. If there is any interest expense incurred for the working capital management, as per the section 12, that is allowed. But that the director's housing loan interest which incurred by the company, that is not allowed. Therefore, under that interest, that director's housing loan interest, you have to add back. Then how much? 710. That even though this is allowed as per taxation, the amount you need to calculate a formula to, right? What is the maximum amount of finance cost allowed to deduct? So how you can calculate the finance cost allow as per section 12. In this case, you know that amount is 1,756. This value divide by loan outstanding at the end of the year minus, sorry, into 4 into equity. The 4 is absolute value. You know that equity is, you have to get excluding a revaluation. But to calculate this limit, just you only know the finance cost allowed as per section 12. Other than that, there is no any information in the loan outstanding. No, you know that equity figure not given in this section. Therefore, you cannot calculate the OD interest. The OD interest, we have to assume that is an allowed to deduct max fully, right? Then thereafter, you can see that we complete that fifth one. Relevant withholding tax on the interest has deducted. So here then we can take the gross interest. The gross interest is how much? I can remember the gross interest was 1,000,000, so 1,000 here, right? 1,000. On that 1,000, what is the withholding tax? I told you early. So what is the withholding tax applicable for interest? The 5%. Therefore, that is the tax credit. The withholding tax paid on interest, how much? That should be 50, right? 50,000 into 5%, that is 50. 50. So the sixth one, okay, the seventh one we have considered. Under that, then the gratuity paid, I told that if there is any gratuity paid, you can deduct that as an expense. The gratuity paid, even though the gratuity provision is not allowed, but the paid is allowed. So 1,450. 1,450 you can deduct. Then brought forward tax loss from the previous year, we have to do that adjustment at the end of the calculation of, you know, that business, that is section 19. You know that the previous 6 years, any tax loss brought forward, you can deduct in the current year. So we'll do that adjustment at the end. So here the self-assessment, there is a tax credit, you know, 6 million. 6 million installment payment. Right. So here now you can take the total of the, you know, that two columns, the plus and minus, quickly. So in the minus column, $9,002.5. Am I correct? Please double check that answers. So here 95,208.5. The 1:1, please confirm these values. Is this values are correct, Puta? Okay, thank you. Then minus, what is the balance one? 86,205.9. Now we can do the adjustment here. The brought forward tax loss. You know that to deduct the particular tax loss of the valuing 6.85 million, we have to check, is there any you know that the property is available? Yes. Now you can see that property is more than enough to deduct this 6.85 million, 6,850,000. So now you can take total value 79,355.9. That is, you know that assessable income from total assessable income from business. So here we can put 79,355.9. So here there is no any adjustment. 2,703,000. Assessable income from investment 2,703,000. Now we can get the total 82,058.9. So only one qualifying payment available. You cannot take 1.2 million relief from other than individuals, right? That is only applicable individual. So there is no such deduction here. 80,638.9. Any mistake? Right, no, right. So in this test, the total taxable income. Now in this case, you can calculate the gross tax liability. When you calculate the gross tax liability, my dear student, you have to concern is there, are there any the gain from the capital gain, right? Capital gain, that means the realization of the investment property. If there is no such income, then you have to look at is there any income including this taxable income relating to the gain from liquor, tobacco, betting and gambling. If there is any liquor, tobacco, betting and gambling, you have to get to separate that income and need to tax at 40%. On that balance income, you need to tax at 30. In this case, there is no such liquor, tobacco, and the betting and gambling, and you know that the capital gain. So there is the total, the taxable income 80,638.9. We can tax at 30%. So here 24,191.67. So here 6,050. That's a total tax credit. So you know that that is 18,141.67 is the balance tax paid. So any doubt what we have discussed so far? There are few questions. The gross කියලා හුවොත් අපි withholding බලන්න ඕනේද? In this case පුතා, I know that you asked this question regarding that interest. Hopefully the interest is given gross name, but there is a separate adjustment you can see at the end. The relevant withholding tax already deducted on the interest. If such kind of information given, you have to deduct it, isn't it? Got it? So what is the tax rate for gambling and tobacco, betting and gambling, puta? Liquor, tobacco, betting and gambling, you know that 40%. 40%. So always we have to calculate the separate for gain, betting, liquor and gambling. Yes, of course. You have to calculate separately at 40% tax rate. 40% tax rate. So did you all get that? Get the answers for your questions? Otherwise, you can ask again, right? I hope I have given all the questions, the answer for all the questions. Now time is up. You know that 9 o'clock, right? Okay, then, right. Thank you. Then, but I will do another one question, right? Another one question. So one is, you know that. Then we'll check that is. Then I will do the tax question. In this time, definitely there will be an SSCL question. The SSCL question, right? Please focus on that SSCL question. Right? Now I will do the question number 7. The most of the students are requested to do that, right? So it's sweat. So VGN Consolidation Limited is the registered company for the value-added tax. They conduct a business of manufacturing elements of the exporters, elements to exporters. That means they mainly made their sales to exporters, right? Right. And the local manufacturers, both exporters and local manufacturers. The company information for the quarter ended 31st March 2024 was extracted for the books of the company. So details of the quarter ended 31st March 2024 is given, right? In this case, you know that first we need to calculate output PET. So output PET. Regarding that output PET, we can calculate sales made to SWET customer. That means SWET supply. You know that under that SWET supply, what is the difference? You can make to that SWET supply. So 30 million. Now, what is the meaning of that puta? Then the tax rate is 18%. Then, but in this SWET, you not received the VAT of that 5.4 million in cash. Instead of that, you will receive what? SWET credit vouchers, isn't it? This 5.4 million you will not receive in cash. Instead of that, you will receive what? SWET credit vouchers. The local suppliers, the local supply, how much? The 45 million 425 into 18%. 18%. 18%. Then here 45 million 200, sorry, 45 million 425,000 into 18%. You know that value is 8 million 176,500. Are there any business asset dispose? No, there is no any dispose. Yes, there is a dispose. Fourth one. In addition to the above sales, the company dispose use computer. The computers used for the business. If you dispose any business asset, you need to calculate the VAT on that. Right? Disposal of computer. 1,420 into the now tax rate is 18%. You know that 255,600. That's all. Right now you can get the total. In output VAT, that is something 13 million 832.1. You can check that. So you can deduct allowable input VAT. Input VAT. So here, what are the input VAT? Import of raw material. No need to calculate the unit. No need to calculate this 18% again. That is wrong. Why? This information given, you know that paid input VAT. If it is paid input VAT, mean this is the amount relevant VAT. Right? Import of raw material, how much? 2,250,000. Instead of that, the repair of machinery. Yes, the machinery is used for the, you know that business purpose. Therefore, that the repair of machinery which used for the business purpose allow, but the repair of traveling vehicle, that is not allowed. The travel, if you use particular asset for traveling, that not contribute to production of the business income. Therefore, you have to write down not allowed. Not allowed. Right. So that's all about, you know, that particular year input VAT. In addition to that, is there any growth forward? Yes, 45,000. 45,000, you can take the total here. 2,310,000. Then on that here, you can deduct growth forward input VAT from the previous quarter. Then how much you have already brought forward? 45,000. So total output input VAT you can deduct from output VAT. Please check whether these answers are correct or wrong. So that's something about 11 million 477 100 as I right as per this calculation. Please check whether this is correct or not, right? That is VAT payable. Then deduct the SWAT credit vouchers. You can deduct the SWAT credit vouchers. Then here again SWAT credit vouchers has collected on SWAT sales. Now I told you earlier, on this SWAT sale you cannot calculate, right? You cannot collect the cash because the SWAT is system. You know that the SWAT registered person can purchase without paying SWAT the amount equal to the particular VAT. The purchaser will give you SWAT credit vouchers. If you are not collect this 5.4 million in cash, how you can pay to the inner revenue department? You cannot pay in cash. That's why instead of the cash, you need to collect the SWAT credit vouchers from the customer. Then you can set off that collected SWAT credit vouchers against your payable amount to the IR, you know that IRD. So here the installment paid 800,000. That also you can deduct. Installment paid altogether, you know that 6.4 million. I had a mistake, 6.2 million, isn't it? So the balance is 5,277,100. That is what? Balance VAT payable. That is the balance VAT payable. So that is the summary of the discussion of that, you know, that SWAT. So with that available time, so then I discuss these things very quickly. If you have any questions. If you have any issue, you can ask now. What are my answers on that?
Yes, sir.
Okay, then I will share to your WhatsApp. What is your WhatsApp group? So however, then I will share with the management team. Then management will share the relevant WhatsApp, right? So traveling is that relevant to the company. Then also do we want to deduct? Not relevant to the company, Buddha. Right? All are relevant to the company. But if any traveling, foreign or local traveling incurred for the production of business income, right? If that incurred for the production of business income, then you can deduct. Otherwise, you have to add back as and disallowable. Clear or not clear? Got it? So don't think relevant to the company because all are relevant to company. Otherwise, they will not incur. That's what. So any other questions? So one student at the beginning asked regarding the SWAT. Now, did you have an understand about that? So please, if you are a person who purchased that vLearning, please go through that vLearning recording again. Right. Okay. Then thank you. Then we are about to wind up the session. Before that, I just want your feedback. So anyone from the management, can you share the feedback link to the chat or WhatsApp group? Then they can give their feedback to them. Feedback about the session.
Yes, sir, I will share.
Okay, right. Right. Please share with our students. So, my dear students, then I wish you all the very best for your upcoming exams, not only for the taxation, but also for all the subjects. If you have any doubt regarding the taxation, you can reach me, right? Reach me. Then if it is a small question, if it is a close-ended, you know that you can send me a WhatsApp message. Otherwise, then if you have any doubt, you can call me and ask, right? You can call me and ask, right? Don't worry. Then you can call me and ask any questions, right? I'm available. But then I know that uh, I'm little bit lazy about that, that typing. Therefore, then if it is a small question, you can ask from the WhatsApp. Then I will send you a voice message. But don't ask a question as a voice message, right? Because then I will be most of the time I will be in the meetings, right? You know that some guest lectures and all. Then at that time I cannot, that. Here you are voice message, right? Therefore, then please send me the small, if it is a small question, you can send me the message. Otherwise, you can call me, right? If I cut that, then I will definitely call back you, right? Okay, then please, my dear students, get your genuine, right? Genuine feedback by using the feedback form. Then it will share to your chat, and as well as please share that to the WhatsApp group, Aloka. Then I will send my the word, the workings to the management. Then management will share with you guys, right?